Walk me through what we learned today from Goldman in their 8K.
Well, Goldman Sachs, which of course has a CEO that used to be a tax lawyer, Lloyd Blankfein, put out an 8K that said they're going to take a $5 billion one-time tax hit in 2017. I think estimates for the full year 2017 earnings were about $7 billion, so that'll be quite a big reduction. They'll probably report a loss in the fourth quarter. That will account, but 2/3 of that hit is because of repatriation. You know, the tax bill was designed to sort of discourage companies from moving profits overseas and reduce their taxes that way. So they're going to be encouraged to repatriate those profits at a lower rate. That's the tax hit that Goldman will be taking in this quarter, and also some of it from the territorial tax regime and from a revaluation of deferred tax assets.
Why is it in 2017 if the law applies for 2018 and beyond? It's
because under accounting rules, they have to take the accounting change in the year in which the change was enacted. So that could actually mean that a lot of companies have to speed up their calculations of this tax effect.
Have other banks reported something similar, and how does Goldman Sachs stack up?
Yeah, JP Morgan has reported a $2 billion hit. They haven't done it in the same way. They sort of estimated it on one of the presentations they gave. They haven't put out a sort of official filing. You know, Citigroup has estimated just the deferred tax asset hits will be as much as $20 billion for them. B of A, I think it was about $3 billion. So a lot of banks are having these effects.
But just to drive this home, and it's, I think, really important, you know, these stocks have done great, and the market is not worried about these numbers. So we throw around stuff like $5 billion. Well, we don't throw it around. They filed it. $5 billion loss or $20 billion loss. But the big picture is that from an economic standpoint and not an accounting standpoint, the market really likes the effect of tax reform. It appears to on these banks.
I mean, as we always see with the stock market, investors are willing to overlook anything that's kind of one-time in nature and look forward. And obviously, a 21% corporate tax rate will be better for these companies. The exception to that is the foreign banks have been putting out some presentations, Credit Suisse and Barclays recently, saying that because of another element of the tax change, which is still unclear how it's going to affect them, that could have ongoing negative effects for them because of the way it penalizes companies that move money out of the U.S. back to their foreign headquarters. So if that's calculated on a net basis, it'll be okay, they think. But if it's calculated on a gross basis, because banks tend to move money back and forth, that could be quite a bit damaging.